Good evening, good weekend, and happy Easter to everybody. This is Brian Paragamon with the closing commentary for Thursday, April 6th, and we kind of talked about today being maybe an upward bias day, and when you're looking at the Dow Jones Industrial Average and the S&P 500 cash, you'd probably think it wasn't, with the S&P cash down 88, Dow Jones Industrial Average down 1461. But when you take a look at the broader market, NASDAQ composite higher by 1241. That at least was up on the day, along with the Dow Transportation's up 782, and you've got the Russell 2000 down 220. Really a mixed day, but it was a day that we thought wouldn't see aggressive selling, and it certainly did not. You've got the earnings season coming on up here in just a short bit, and I think you might find some margin pressures as we move into the season. To a degree, a little bit, especially from the euphoric expectations that are out there. Earnings should be decent, but I don't think they're going to be fantastic, and in some cases, they're probably not going to be good, and some of the guidance probably won't be the greatest either. But, of course, you're going to have some good, you're going to have some bad, and you're going to have some indifferent, but overall, I think they should be decent, but I don't think they're going to actually meet a lot of expectations out there. I think it's interesting to note that margin interest is at its highest level on the NYSE for this move here, and it doesn't mean the stock market has to top out, although I think we are seeing the stock market topping out. But the margin interest being at its highest levels is actually helps facilitate the move higher, and actually the Fed also, by having this easy monetary policy for a period of time, has actually moved this stock market higher as well, as we talked about, for a period of time. Having said that, though, this can all be reversed very quickly when margins are pressed and margin calls start going out, and that's probably about time when we'll see even stronger fund redemptions and algorithms kick in with sell programs that, in fact, might cause a crash on one or more occasions during the months of April, May, or June, or maybe all 3 months. Now, we're not calling for a flash crash, which that's what I think we could have happen, but it's possible that it could happen one of those months or maybe all the months. Who really knows? With all the margin buying we've seen of late, this has an effect of compounding any decline that starts getting going, or actually enhancing a desire to sell any rallies that we get here, if in fact they do occur, which they will, because nothing's going to go straight down, not in this market, unless of course you get just a massive flash crash or a crash. But that will essentially start reversing the pattern of buying the dip mentality that we've seen all year. You might start getting the sell the rally mentality, and I think that will evolve eventually into what we get a stair-step decline with selling begetting selling. So I think it's interesting that, we're probably starting a transition phase of sell all rallies as opposed to being a buyer of all dips, but just yet we haven't seen the real trend broken to the downside. Not quite yet, but I think eventually we do. We've suggested for a period of time, I should say, not chasing the move to the upside, waiting for better entry point, which I think is coming. Determining how far down this market goes is really a fool's game, as we can measure moves, but we'll simply let the message tell us where this market wants to bottom out. But let's first get this decline underway before we start worrying about where a market might be bottoming out. Many people want to know how far we can decline. Well, who really knows? Like as I just said, let's see how this starts playing itself on out to the downside, and we'll let the message of the market dictate how far it wants to correct. A lot of technicians are talking about 5 to 8%, but you know what? They don't really have much basis for pulling that number and percentage out of thin air. It might be enough perhaps to keep some of their customers in the market and have them not worry about what they would perceive as a small pullback. Of course, I think this market is going to give us more than that, and I'm pretty sure you're going to probably get a minimum of 10%. We'll see if it's 15 or 20. Again, let's let the message of the market tell us. But I'll tell you what, when this occurs, you're going to have a lot of people come out of the woodwork with why this is happening, whether it be another financial crisis in the EU or a military conflict over in the Middle East or oil shock that, you don't really know could or couldn't happen, or maybe some other exogenous event that could cause this market to go into a decline, a precipitous decline. But you know what? We've seen all these reasons. We've talked about all these reasons, but many of the pundits out there are simply saying, these reasons don't matter. The stock market's working higher on a wall of worry. And you know what? Yes, it's a wall of worry until it becomes an actual problem that starts festering into something bigger. And this is something we think in the fullness of time, whether problems foster into something bigger, or not we think the stock market is due for pullback activity, and maybe something even more than pullback activity as you start approaching this later part of the springtime. And for those that think I'm always a bear on this stock market, that's not true at all. Before I even started doing these broadcasts, I was very bullish the stock market, and we turned bearish at the right time. We turned bullish at the right time, and we're turning bearish here again as we get into the springtime here, because I think the stock market has run its course here. And when it comes time, I'll turn out to be one of the biggest bulls of the stock market. I just don't see any reason to rush into the stock market and get bullish this market into such strength, considering we've had some monstrous move off to 1075 October lows all the way up to 1400. I think it's just foolish to go ahead and get real bullish up at these numbers. I think we've got some real battleground areas that we have to talk about here in the S&P cash, and it's going to kind of correlate, right across the board as the S&P cash starts breaking down. You'll probably see a lot of other indices breaking down as well. But we take a look at some of these battleground areas that I've got outlined here. 1391 becomes the first, then 1387, then you've got the 1370 where the 50-day comes in, and the 1351 area is the October uptrend from 1075, and that's this moving this trend line right in here. You can see you've got the 1370 area. That's where the 50-day comes in, and then you can see you've got your two other moving averages. We're basically slightly above the one here at the 1391. That's your initial pullback you had from the peak up towards the 1420 area. I think that becomes a critical area of support, battleground we should call it. And then you've got this pullback area in here, 1387, that you pulled back before you made a higher high. So all these higher high and pullback numbers become battleground areas that they're going to want to try and hold. And the 1400 was the first battleground that they've been trying to maintain, unable to, but you can now see this market is now starting to want to roll on over to the downside. They're going to try and hold it as best as they can. 1401 is where the 20-day comes in, so we've closed slightly below it here today. But, again, they're going to do as best as they can to hold and prop this market up. They're not going to let it die until they have to let it die, but I suspect in the fullness of time, it gives way to the downside, and we find this market in a serious retreat. Now, if we start breaking down below the 50-day moving average in here, you'll probably get a quick, swift move down towards the uptrend line from the October. That's going to come in around 1350, and then you start taking that out to the downside. You probably get a quick plunge on down towards 1290 to 1310, and if we do end up having some type of a crash for some reason, we could see numbers like 1195 to 1220. Where we come up with that type of number? Well, if we go ahead and flip over back to the weekly chart here now, we could surmise seeing this market come all the way back to this number right in here, which is in this 1290-ish area we talked about. That would come in right where you had your first peak off your 1075 low from October of 2011. This is where you rallied on up to into this zone and before pulling back to start forming this uptrend. But I think this is where you could pull this market back to in the event you had something like a crash for some reason. It doesn't mean, let me make the point here, it doesn't mean any of these numbers I've talked about will be seen. It's just simply numbers that could be reached or exceeded if you have some type of an exogenous event. All these numbers could be overly optimistic, meaning you could actually see lower numbers in this. I think a lot of it has to do with what goes on with the Fed. A lot of it has to do with what goes on over in the EU. A lot of it has to do with what goes on with the fiscal situation here in the United States. If, in fact, you get, a slowing economy here, next thing you know is the Fed resurrects QE3, and they go ahead and save the market again, and then we get another push to the upside. But in the end, what it really would do if you had another QE, it would simply hurt the nation further. You see, we've got the pattern right here, we've got the facts right here, but we really don't know the next month's Wall Street Journal, or for that matter, next week's Wall Street Journal, where price quotes are going to fall. So none of us really knows how this is truly going to play out, but we can surmise and start talking about some of these lower price points, because I think now becomes the time we have to start talking about a lower stock market, and a stock market that needs to now be shorted into any further strength. If we do start getting any further strength here, I will start to position myself in a TWM position, which would be bearish the overall Russell 2000, and just simply sit. We could try and press this market back to the upside, but I think you can now start seeing this 1420 area as some solid resistance, and I would not be surprised one bit if the market has topped out at the 1422 level basis to cash. Of course, the internal high is well behind it. Let's give you some support and resistance levels as we head into the new week on Monday. Support's going to come in 1393 to 4, below that 1385 to 6, and then 1387 or 1378 to 1376. Resistance directly above head 1404 to 6, and then 1411 to 12. Euro support 129.70 to 130, below that 128.60. Resistance 131.60 to 132. The euro right now 130.05. It's been continuing to soften on up here. Troubles over in the EU, troubles over in Spain in particular, rising interest rates over there. Bond auction is not going that great. CDS spreads moving on up. In fact, you've got the highest rate on interest rates over in Spain, actually higher than when the LTRO took place. You also have the fact that the LTRO has kind of been washed away now, and this is now what you see when you get rid of QE over in the EU and you get QE gone here in the States. You start seeing the markets pulling themselves on back, and I think we'll continue to see that. All railings I now think are false and abortive, and I do not believe dips should be bought anymore. Of course, some dips will be bought, but I continue to think really now the trend will start moving to the downside, and all railings will be false and abortive, and the buy the dip mentality I think is starting to be erased. The Crown Oscillator minus 160, mildly oversold, so we can continue to see it move even further to the downside. It doesn't have to. Again, ideally and personally, I would love to see this market try and push back to the upside to position myself in maybe a TVIX or maybe in a TWM position that at least have some representation on the short side. Let's give it a rundown here now on the averages. Dow Jones Industrial Average down 14 points on the day. Dow Transportation higher by about 8. S&P 500 cash down less than a point, 88 cents. Dollar index 80.27 up 33 cents. Bond market 138.10. Putting it up almost 3/4 of a point. Absolutely crazy. You know how now you've got people moving back into the bonds, even though they say the economy is stronger. Well, maybe they don't believe it, obviously. 10-year note 2.175 on the yield, down 68 basis points. NASDAQ composite up 1240. Oil 103.12 puts it up $1.10. Nat gas continues to suffer around 209 to close, down a nickel. There was a Nat gas report coming out, a higher bill than anticipated. Gold 1631 puts it up $9 on the day. I think any rally back in gold to the 1640 to 1660 area, I think it's for a shorting opportunity. We'll look to maybe position ourselves short the GLD if we get a push up towards 1640 to 1650, a congestion zone up in that area. Silver 31.64, higher by 31 cents on the day. Russell 2000 down 220. Gold stock to back $1.80. The drugs down 69. The oil index down 777. The biotech's up 10.19. The banks get back 13 cents as a whole. Semiconductors up 130. Computer index up 593. Airlines down 21 cents. Retailers up 4.19. Volatility up 26 cents to 16.70. And you've got the breadth on the NYSE 1284 advance versus 1695 decline. NASDAQ 1172 advance versus 1318 decline. Interesting in that you actually had 146 more stocks declining on the NASDAQ than advancing, yet you had the NASDAQ higher on the day. Again, I think that has a lot to do with the fact that you've got a narrowing of participation on the NASDAQ. And of course, Apple up 937 on the day, up over 633. That is a lot of reason why the NASDAQ continues to push higher, and I think that's been masking a lot of things here. As far as economic data goes, we did have some economic data today, so let's go ahead and take a look at that very, very briefly. You did have challenger job cuts come in minus 8.8%. Prior was up 2%. Initial claims comes in at 357,000. Expectations were for 355,000, so that came in worse than expectations. And continuing claims comes in at 338,000. Expectations were for 336,000. There was a lot of talk that these numbers were much better than expected today. From what I'm looking at, they did not come in better than expectations. But the big number when the market is closed tomorrow is actually the non-farm payrolls, non-farm private payrolls. You also have tomorrow unemployment rate, hourly earnings, average work week, and the consumer credit. As far as our swing trades go, let's go ahead and dial those on up. Very tough market in here is all I can say. We were long some Freeport McMoran options, FCX, the 36 calls for April. We went ahead and sold those on out at $2.67 for a 31-cent gain. You can see what the stock eventually did. Trades down to 37.80 on the close, down 23 cents, but it actually pushed on up into the 20-day moving average, slightly above it, filled the gap from yesterday as we indicated we thought it would, and upon it pressing that 38.50 area, we sent out swing trade alerts, went ahead, closed the position on out, banked a decent little profit on it of 31 cents. As I said, I'm going to look to take profits a lot sooner than we typically have been, because we have plenty of positions where we've been making money and we end up, either breaking even or taking a small loss. We're going to start taking profits when we've got them. You can also take a look at BTU 28.27. This closes down 16 cents. We went ahead and sent out a swing trade alert stating, let's go ahead and sell this position on out at 29.45. We did exactly just that. It ended up trading on up to 29.80 eventually, but more than enough time for people to get on out at the price we talked about, 29.45. We took 67 cents off the table there, and then we went ahead and initiated a new swing trade today on Humana, which is actually one of the stocks we want to be looking at from the long side of the ledger. Let's go ahead and pull this on up here. It closes 91.27, up 46 cents. We went ahead and made a slightly higher high today, very near the close of 91.46 versus yesterday's 91.41. You've got some support here now in this 90-ish area here. Basically, this is where our stop is going to come in, right in this 90 area. If you're long the stock, you want to stop yourself out down around 90. If you're long the options, when the stock is down to that zone, you want to stop yourself out on the options. It's just that simple. What else do I want to look at from a day trade perspective? Well, I want to look at WellPoint. I think this is a stock that is an interesting pattern here as well that I think is going to find itself pushing back to the upside. And incidentally, WellPoint, Humana, United Health Group, these are all stocks that are somewhat defensive that I have on all my long side radars moving into tomorrow's tape action. 72.38 up 26 cents, pulling back from 74 here over the past 4 or 5 days. I've got WellPoint on my long side moving into tomorrow's tape action, Monday I should say as well. United Health Group, same thing. This stock here has had a real shallow pullback over the last couple of days from a 59.61 high. You went ahead and made a slightly lower low here today on the day by just 7 cents. It closes kind of, middle of the range here today. But I've got this on my long side as well heading into Monday's tape action. But I'll tell you the one that I'm really intrigued by the most, that is Humana. A couple other stocks that I want to look at here. One more actually in particular, and then just a general comment on the commodity stock. Cleveland Cliffs, this stock here, we actually played it from the short side here today during our live broadcast. Chipped it, made a little bit. I thought this eventually would find itself holding the tent and moving lower. 67.05, down 123 on the day. I've got this on my short side radar. You now have a gap coming in here that I think eventually gets filled right over in here. You can see it comes in on a closing basis at a 64.91. Plenty of room to the downside. I think all of these stocks, whether it be a Cleveland Cliffs, a Freeport McMoran, a Walter Energy, Freeport down 23. Walter Energy, that reversed from earlier gains, down 118. You can see this stock here looks like it's on the verge of breaking back on down again. You can look at an Alpha Natural Resource. Let me just draw the trend line here. You can see it's on the verge of breaking on down from these price points in here. Alpha Natural Resources, we'll go ahead and pull that one on up as well. This is a 6 stock. This closes down as well, down 56 cents. For all these commodity-related stocks, whether they're coal, whether they're copper, they're iron ore, they're steel, U.S. Steel, same thing, closes down 67 cents on the day. All these stocks here should need to be shorted into any rally attempts until they start to show themselves on a real relative basis basing out patterns while the rest of the market continues to crack, which we anticipate occurring here. Until you see that happen, I think any of these stocks in the commodity-related area should be played, if you're going to plan from the long side, only for scalps, is exactly what we did today by taking profits in BTU and Freeport-McMoRan. I've got nothing further to say other than have yourself a great, enjoyable weekend. Happy Easter to everybody. I'll be back Monday morning with a live webcast. Thanks for tuning in.